Welcome back. In our top business story, car maker Toyota is recalling 2,000 vehicles in the UAE due to steering problems. And these are the cars involved, according to a Toyota statement. The 2004 Avalon, the 2004 and 2005 Camry, Highlander, Sienna and Solara, the 2006 Highlander, the 2004 and 2005 ES330, and the RX330, and the 2006 RX400H. According to a local paper, the managing director of Al Futtaim Motors, Simon Frith, has stated that they are in the process of contacting all customers who may have a faulty car. Globally, Toyota recalled 550,000 vehicles with the same flaw, of which 80% are in the US. No accidents have been reported so far. US plane maker Boeing has so far sold 999 of its 777 models globally. The lucky number 1,000 will go to Emirates Airlines. It will be delivered to Dubai's flagship carrier in March next year, Boeing said in a statement. Emirates is the largest 777 customer with currently 95 airplanes of the model in its fleet. Boeing reached this new milestone in 16 years, 8 years sooner than the runner-up, the 747, because of the enormous popularity among the airlines that operated, Larry Loftus, vice president and general manager of the 777 program, said. Statistics show that the UAE's oil output rose nearly 1% in September from August to 2.6 million barrels per day, their highest level in 3 years. By the end of the year, the Paris-based International Energy Agency forecast the UAE production capacity will even average around 2.7 million barrels per day. Its report added that the global oil demand is set to average at 89.5 million barrels per day this year. Statistics from the IEA show that also Kuwait hit its highest output level in September. Gulf stock markets fell today, just like their counterparts in Asia, on growing alarm that soaring borrowing costs could overwhelm Italy and lead to the breakup of the common currency area. With that, let's now look at the stock indices across the GCC. The pace of Chinese exports growth is slowing as China struggles with the European debt crisis. We have Bruce Powers, Head of Research at Trust Securities, here with us to discuss the matter. Welcome, Bruce.
Hi, Linda.
Do you think we will see monetary policy easing in China anytime soon?
Well, over the past year, we've seen a tightening in order to slow down growth and guard against inflation. I think the Chinese will now be watching a number of economic indicators very closely to get confirmation of a slowdown that then might require them to shift to an easing. But I think this one report, just kind of the beginning of that. So I think we have a ways to go before they would shift their policy. China is still the number one growth driver in the world economy, driven by their exports. They have seen their exports support all the other countries in the world. I think that if we see continued slowdown in Europe, where we did see a slowdown in the exports to Europe a little bit, but they picked up in the U.S., so it's not across the board that they're getting hurt in their exports. Christine Lagarde recently suggested that they focus more on their domestic demand. Now, we did see imports rise by over 28% last month, which is pretty good, but there's some concern that that was largely driven by domestic manufacturers building their inventories due to low commodity prices. Regardless, it still shows a healthy domestic economy.
China's healthy, not so much Europe. Now we had Papademos leaving, Papandreou was leaving. He said he's going to step down as Greek Prime Minister. Now we hear that Lucas Papademos will follow him. That was confirmed just a few minutes ago. And Italy, Berlusconi will also leave. Do you think that these new political leaders will in fact do a better job in solving the EU debt crisis?
Well, of course, it's going to be difficult for whoever is in charge. I think at least we're having some change, and that should help free up some of the political disagreements and help reach some decisions. Now, the situation in Italy is much more serious than what we see in Greece, with Italy being the world's eighth largest economy, and they have more debt than Greece, Ireland, and Portugal combined. Now, if you remember, just a little bit before the bailouts in Greece, Ireland, and Portugal, their bond yields also reached 7%. So this is seen as a bad omen for the future of Italy. Now, the problem for them is that they have a lot of debt that is maturing that they have to roll over, and they're going to have to do it at a very high rate. There's about 200 billion of euros due in 2012. So I think maybe they could survive at these levels for another 6 months, possibly, but not much longer than that. So it's a real problem for the world economy.
An economy too big to bail out, probably.
Yeah, exactly.
Thanks for coming in, Bruce. And too big to fail, exactly. Thanks for coming in. Have a good weekend.